Picture this, a bank that for 158 years was considered untouchable. One of Wall Street's big four investment giants with hundreds of millions in assets. What if I told you that in just 1 week, it went from market dominance to becoming the largest bankruptcy in American history? In September 2008, Lehman Brothers didn't just collapse. It dragged the entire global economy down with it. How is it possible that a financial empire spanning over 2 centuries could vanish in a matter of days? In 2008, the United States was experiencing one of the most devastating crises in its history. Hundreds of companies were going bankrupt. Thousands more teetered on the edge, but nothing compared to what was happening inside Lehman Brothers. This investment bank, founded over 200 years ago, had managed to position itself among the top 4 investment banks with the highest revenue per capita in the world. Today, we'll uncover how an apparently brilliant strategy became the bomb that not only destroyed Lehman Brothers, but also exploded the global economy. Join me on this journey to understand how greed and corporate blindness can destroy empires that seemed eternal. Before the crisis, Lehman Brothers was living its golden age. For decades, this financial giant had built a solid reputation as one of Wall Street's most aggressive and successful investment banks. Their formula was simple yet effective. When opportunity knocked, Lehman was first to pounce, and generally first to win. The firm controlled Aurora Loan Services and BNC Mortgage, giving them direct access to subprime mortgage companies. It was like having the keys to the American real estate kingdom. For years, this strategy had generated extraordinary profits, cementing their position as one of the industry's heavyweights. But then came the opportunity that would change everything. The U.S. housing market was booming, and subprime mortgages presented themselves as an untapped goldmine. Major banks had adopted more accessible lending policies, creating a surplus of mortgages that apparently promised massive profitability. What Lehman didn't see coming was that they were about to inflate the very monster that would devour them. Their characteristic corporate aggression, which had always been their strength, was about to become their Achilles heel. To understand the magnitude of Lehman's mistake, we need to grasp what subprime mortgages actually were. These were divided into 2 major categories: MBS, bonds backed by mortgage payments, and CDOs, payment structures serving as medium-term collateral. The logic seemed rock solid. If someone could comfortably pay their mortgage, their MBS and CDOs were valuable because they represented security for the lender. Imagine your debt becoming a valuable asset for whoever lent you the money. But what happened with people who had no credit history or little ability to pay? That's where the problem nobody wanted to see lay hidden. The market had a surplus of mortgages that didn't have the credentials to be profitable. Rating agencies, responsible for verifying whether someone was suitable for positive credentials, began having suspiciously low standards. Basically, they slapped AAA ratings, the highest possible, on anything that moved, just to get rid of the garbage flowing in from banks. Moody's became Lehman Brothers' main ally. This rating agency had a direct deal with the bank. They'd hand over subprime mortgages at rock-bottom prices, promising the loans would be profitable. It was like buying wholesale from an elite distributor, except the product was defective from the start. Lehman started buying like crazy. They leveraged themselves in ways never seen before, apparently fascinated by the idea of testing the market's limits. They massively indebted themselves, but hid this accounting reality using strategies like Repo 105 to avoid spooking investors. Leadership was obsessed with mortgages that, for a while, seemed profitable. Their liabilities grew exponentially, but the euphoria of the moment had completely blinded them. It was like driving full speed with a blindfold on, trusting the road would stay straight forever. Blinded by the opportunity for massive gains, their business vision became completely skewed. They couldn't see the clearest warning signs: subprime originators falling, the ABX index plummeting, BNC's closure, another company in the same business, and finally, Bear Stearns' collapse. It was with Bear Stearns' fall that they realized the grave mistake they'd been making. Essentially, they'd been inflating mortgages, affecting their net worth and turning them into a bubble too big that had already consumed their big brothers and was about to explode right on top of them. On September 12, 2008, Lehman Brothers desperately tried to negotiate mortgage sales at fire sale prices and rescue loans. All were rejected. Their liabilities had reached $640 million, exactly matching their assets, a clear sign of imminent collapse. In an act of desperation, they tried to request a government bailout, but the U.S. government flatly refused, viewing the collapse as a well-deserved downfall for their irresponsible actions. On September 15, 2008, Lehman Brothers declared bankruptcy. The company that had survived 158 years, 2 world wars, and multiple economic crises vanished in 1 week. It was the fall of a giant and one of the hardest blows to the American economy in decades. Lehman Brothers' collapse exposed many similar critical cases and the liquidity shortage that was corroding the entire real estate market. The contagion even reached Europe, proving that in our globalized world, no company is truly immortal. This collapse triggered one of the most significant banking reforms in U.S. history and demonstrated how easy it is to make a mistake that can cost you your company and millions of people's money. The Lehman Brothers story teaches us that blind greed and failure to assess risks can destroy financial empires that seemed eternal. At the end of the day, no company is above the market. Arrogance and lack of financial prudence can turn decades of success into an overnight nightmare. Can you imagine how many companies today are making similar mistakes without realizing it? If you're interested in learning how giants can fall, subscribe for more business and finance stories that change the world. See you in the next video. Don't be a scammer.